we're joined now by an expert. We have Nancy Havens, president of Havens Advisors, a New York-based arbitrage fund manager. Nancy, always a pleasure. Thanks so much for coming in.
Thanks.
So I'm reading a litany of deals.
Yes.
Deal flow has been
great.
Okay, take it away. How great has it been?
Well, July was the best month in mergers since July 2008, according to Dealogic. And in June, things sort of calmed down a little bit, and people said, the sky is falling, where the merger period of merger frenzy is over. And it turned out not to be the case at all.
Where's the money coming from?
Well, you have the same thing, the same factors. Companies have lots of money, and they have no place to put it. Still low interest rates. Still, it's a bigger risk to build a factory. It's much lower risk to just add to your product line, to reduce costs by buying a company who's a competitor, which is what's going on in the Medco situation. For any number of reasons, it's a low-risk deal to do.
From the corporate strategy perspective, right? But it's not a low-risk deal right now from the arbitrage world, right? Because what's happening to spreads right now?
Well, spreads had gotten very narrow.
Right. And that's the difference between what the bid is and what the offer is.
Right, especially in June. But today was a wonderful day. There were things, we could purchase things that we hadn't been able to buy all month. There was a dramatic widening of spreads today. And you also had some event-specific stuff. For example, in the Ecolab deal, Cascade, which is a Bill Gates entity, and Bill Gates filed a 13D on Friday night, and they indicating that on Ecolab, indicating that they might take a more aggressive position. They changed from a 13G filing to a 13D filing. They didn't say they were going to be more aggressive, but 13D is instantly more aggressive. And so the spread blew out from like 75 cents to $2. So you did have some deal-specific things that made people worry. And Ecolab was at a price of like 56 before the deal was announced, and it's now at 49.
Right. Well, so, I mean, falling as the market fell today, which were more than 260 points.
Right. Right. And we had a massive fall today. I mean, the S&P entered, as you know, back into negative territory for the year.
Now, you said just before you came on, though, you said that on a day like today, you don't like to look at the profit and loss sheet for the month, because then you're going to make decisions that are not necessarily the right ones.
I think what you have to do in a period like this is take those deals that you've always wanted to buy that had too narrow spreads to be really interesting and buy them, because those are generally the lowest risk transactions. What we don't normally do on a day like today is go for the gusto, because this could continue and there could get to be more gusto. But today was the kind of day when you could really buy some very, very good deals, like Lubrizol, for example, which is a deal that's it's Berkshire Hathaway Lubrizol. It's a pretty straightforward deal. It's going to get done. It's just a matter of time. We're waiting for a bunch of approvals, including China. But things like that are great today.
All right. So don't necessarily be a hero.
Right, right.
We're going to leave it there. Thank you very much, Nancy Havens, joining us from Havens Advisors, giving us some insight into the world of mergers and acquisitions. Thank you very much.